How's everybody doing? How's everybody feeling on this beautiful Wednesday? Let's just rock out for a little bit. I gotta find some good music. Shout out to StreamYard for providing this, but I need something to really get me in that space. I hope y'all feeling me on that one though. We'll just give it a few before we really get into this week's news. It's a crazy week, crazy week. That's all I gotta say. It's that type of stuff that you listen to when you're about to go to sleep. How's this supposed to get anybody ready? Rotted up, rowdy, or anything. For anything that they got going on. Okay, I don't know if I could take this any much longer, honestly. I'm trying. But, we'll just get right into it because this week's news, oh, brother, it's like one of those things. It's like, why is so much happening right now? But this is the place where if you don't know already, you're going to hear about the most up-to-date news, especially if you're a buyer in this real estate market, because that's really where I focus in on, is helping the buyers understand what's going on in the market so that you can, I guess I would say, is you can cuff yourself or at least acute yourself with information to help you in that market, right, that you're in. Of course, I don't cover every single market. I only cover North Carolina. And when I say I cover it, I work in North Carolina, so I help buyers and sellers in North Carolina specifically. But a lot of times, this information I am providing you on a weekly basis is going to help you understand what's going on in the market. What should you look out for? What can you do? What should you not do? So this is one of those conversations we're going to have today. And of course, every Wednesday, catch me here. If you have questions, drop it in the comments. Let's talk about it. If you have specific scenarios, just if you feel openly and free and wanting to do that, go ahead. If you don't, you can always reach out to me via email and we can take it away from there. But this week's news, let me go ahead and share my screen. I don't know if you guys are going to be happy with this one because when I saw it, all I could say is, uh-oh. Here comes the M&As. And if you know what M&As are, there's changes in the market. Do. And let me zoom in just because I know my good old buddy will be proud if I did this right now for you guys. But you see the statement. Rocket companies to buy real estate firm Redfin. And I mean, that's a large amount of money. I mean, $1.75 billion. I mean, that's one of those things where you look at it and you say it's either going to be a really good investment or a really poor investment. But what does this really mean in itself? Essentially, it sounds like, based off of what I read and everything I looked at, Redfin was having a little bit of trouble running their business. And so if you guys don't know what Redfin is, it's very similar. I shouldn't say similar to Zillow, but it's a platform where you can go and search for homes. They have, if I'm not mistaken, they have their own agents that worked for them. I know that they sold off all of our information, honestly, like everybody else is doing. Everybody else, meaning every other company out there, is doing. What else did Redfin really do? I know on the consumer aspect, it was really helpful. It provided a good amount of information. In fact, honestly, I could vouch for them because a lot of the information that I even provided you guys, and we even looked at, it was from Redfin. And so right now, I'm like kind of on the fence because if that information does go away, that is going to tremendously hurt buyers just because some of that information is not always accessible or readily available. But I guess we shall wait and see. I mean, there's no real telling. But if you're not familiar with rocket companies, if you have ever got a mortgage or got a mortgage from Rocket Mortgage, that is what the rocket companies are. I don't know what else is entitled in that rocket company. I'm sure it's a whole conglomerate that I'm just not familiar with. But I do know they're really big and known for their mortgages that they do originate and help people get. And so my take on this, right? Well, before we get there, I'll just give you some insight in terms of how it's all going to look. And just before we do that, let's do this here. Just get situated here. So this merger is expected to be complete by the end of 2026. So we're talking about something that's going to happen relatively quickly, as long as, of course, all the what is it? The I forgot what they have to go through. They have to go through something where it's like everyone has to agree to it. There's an exact term that I'm just not thinking, but that is going to happen by the end of 2026 at the moment. And then there was also a statement that said, I don't think it's here in this article, it's somewhere else that I read it, how much is actually supposed to save them over. Oh yeah, here it is. It expects to combine the company to achieve more than 200 million. Oh my gosh. Right? So we're talking something that's gonna save and make a company more than 200, well, probably, yeah, more than 200 million in the longevity of time. And so, yeah, I was just reading this real quick just to kind of get some more information. But if you guys, like I mentioned, if you don't know, Redfin and Rocket coming together, I think it's a good, from a business perspective, right? It's good, right? Because again, Rocket Mortgage is going to literally, they give you the mortgages, whereas Redfin, on the other end, they're helping buyers and I would say sellers at the same time, depending on what the seller is really trying to do. But let's just say mainly buyers in this perspective, because now let's just look at it like this, right? So a buyer comes in and the buyer's like, all right, I'm gonna go on Redfin, and they're gonna put all their information in and they're gonna start searching for homes. And the second that you start searching, what do you think is happening? Redfin's data, they're following you, they're trying to understand what it is that you like and X, Y, and Z. And then I think this is what's gonna happen. I truly do think that at some point in time, Rocket is then going to be like, hey, do you want a loan, or do you want to see if you qualify, or something on that scale. So it's going to allow that seamless process that right now many buyers don't have, because even myself, right? So if a client comes to me for the very first time, or a prospective client I should say, for the very first time, is like, hey, I want to buy a home, if they don't have a lender already, they're going to get connected to my preferred lender. And then I always recommend, hey, go seek out others if you would like, but you're going to get connected to someone immediately, just because we got to understand if we're looking within that right price point, a price range that you want to purchase a home in. It would be the worst thing. I would be the worst agent if I were to go ahead and show you homes that I know that you're not going to buy, and it's like I'm wasting your time and honestly my time at the same time. But those two conglomerates, I think, coming together as a collective is going to allow that process to be a little bit more seamless. Uh, It also states here that I don't think it's stated in this article here, but it also stated, I did mention and took a note down, that it's going to help with the title and the servicing of it. But again, I think that's all in alignment with the mortgages at the same time, which is it's going to be the same. But I'm going to be more disappointed on the website aspect of things. The data, the information. I mean, most people, I think personally, are on Zillow anyway, so I do know that Redfin is like second behind Zillow, which I think that's another big reason why Rocket decided to get Redfin, is because they know that, all right, Redfin is not really top notch. They're not top dog, so they're gonna try to go after Zillow, of course. But why would they want to? As I mentioned, seamless process to go after the data, to be able to sell or to be able to pitch their mortgage services, their mortgage loan originations to individuals that are looking in that market to purchase. But it's a really big deal. It's a really big deal, and I laughed when I saw this, just because I shouldn't have laughed, but it made me chuckle, just because one thing that I took away, also another thing I also took away, is Redfin was really known to be that, I would say, discounted broker. And so with Redfin being like that discounted broker, meaning they kind of, whatever fees that your average your average agent will charge, they were kind of always a little less than them. So right now, let's just say 2.5% is what your buyer agent is seeking for compensation to helping you purchase your home. Redfins would always be, I don't know exactly what theirs, but let's just say, for example, they were always probably like 2%, maybe 1.5, maybe even one. I mean, that's, I could probably see, if if we're talking real discount brokers, they're probably doing flat fees, or they're really doing like that 1% aspect. and that 1% being 1% of the purchase price would be the compensation to the agent. However, Redfin had issues. They had trouble. So what this really told me is I don't know if that model is still going to work. I'm sure there's people out there that are still doing it, but for somebody that has billions of dollars behind them, backing them, and they still have some issues, I mean, they attracted as many people as possible on that website for literally probably no cost, given that everything was SEO generated or even word of mouth. That is pretty remarkable, right? To say the least. And to see that they weren't really able to sustain that or at least keep that going, then that really says something in itself. But my biggest concern is when there's a merger and acquisition and M&A for short, someone is going to win and somebody is going to lose. In this case, yes, I do see Redfin as losing, and of course Rocket as being the winner because of course they just got a ton of information and allows themselves to even seamlessly sell more of their services or even products, depending on exactly what it is that they even have. But also, on the other end, it's gonna hurt, I think, consumers too. So not only do I see it really hurting Redfin, and Redfin's probably like, yeah, we're gonna do this for the consumer. Yeah, yeah, they're gonna toot that horn and just kind of keep that going. But I truly indeed don't think that this is gonna help the consumer in the long run, because it may also increase the cost of services, right? That they do have to offer. It may also, and this is one that actually is a funny one. It also may allow customer service to decline. And I say that real cautiously just because I haven't heard really much good things about Rocket Mortgage, to say the least. And so to see that, this could potentially, just because again, we're talking about more information. We're talking about a system that is going to require more legwork, right? More systems, something to be in place. Again, not all this stuff cannot be automated. Some real person has to be in this at some point in time. But when you're doing things at such a large mass and servicing so many people, things are going to get lost. And that is essentially what I hear a lot. I personally haven't dealt with Rocket Mortgage, so I can't really tell you what my personal experience has been, but just off of the people that I've spoken to that have used Rocket Mortgage, whether it's a real estate agent, a buyer, sometimes I hear it that it's more of like a transaction. It's not a relationship that's being built there, and it's lost, right? And this is not a business where, and especially in real estate, you want that relationship with someone because again, most of us are purchasing a home, and that's one of the biggest assets that we'll purchase in our lifetime. So you want someone that's really going to have your best interests at heart, actually be personable, someone that's actually going to be maybe even creative, right? Maybe you have a certain scenario where the traditional route doesn't necessarily work. So, you might want to tweak some things here and there, be a little bit more flexible. I'm again, when everything is so systematic, good luck, that is kind of the things that I see. But I just wanted to really share that with you because I'm sure if you didn't see it, now you know, but this is something to kind of just be on alert about. It may cause some big changes for you and the way you search for homes, but I don't think it's going to make a big difference. It's just something that, it's good to know that, hey, this is where Redfin is heading, and this is how it's going to combine with Rocket Mortgage or Rocket Companies. And so this is just my take on that one. But we're really going into what I really wanted to discuss because, as you guys can see, we're talking about big savings, big savings for buyers. And before we go ahead and do that, let me take this sip. And so when we talk about big savings for buyers, I do want to ask you a question though before I go ahead and do that and say, what do you think this is? Do you think it's a coincidence or is it all of this was planned? All right, and I say that because mortgage rates, if you don't know, have been dropping. Nothing, not dropping to the point where it's like, oh my gosh, everybody's running to the market. No, no, we're not there yet. Nothing's wrong. Nothing. Everything is still fine. Maybe in the near dear future, things will start to go haywire, and then you'll hear about real estate being top of the market, top of the mind on the news every single second of the day. But right now, no. The mortgage rates have been dropping, and it's all happening just before the spring market. Oh my, we just had a stream about this, about the spring market and how to prepare yourself and what's happening. And next thing you know, rates start to come down. And so, Spaghetti-O, let's double check. Alright, got it. Mortgage. This thing is happening a little bit too often for me. I'm not sure what's going on right now. And the crazy thing is, nothing really changed. And I think we are back. Yeah? Okay. I think we're back. I lost connection. Oh, please. Everything, all my devices were still connected. Let's do this real quick because give me one second for the people on the replay. Maybe you just skip that. But as I was saying, is it a terrible thing that rates are dropping? No. Of course, especially for those that are actually in the market. Is the thing this we're just going to talk about this. I personally think this was planned, honestly. Like, hey, let's just before the spring market to get more, stay activity going for whatever reason, whatever metric that they're trying to hit. Um, and I say they mean more of like the Feds. Literally. As soon as I said, hopefully my connection doesn't go out, what do you think happened? Let's just make sure we're good. Yeah, we're good. I have to fix this Wi-Fi thing immediately. Sorry. Let me go ahead and share my screen again so we can really take a look and to see what was going on with mortgage rates so that you are fully aware and see where the market's at. Alrighty. So mortgage rates, as I mentioned, fall again as the economy cools further. That's interesting. As it cools further, how long is it gonna cool down for is the better question. Let's get these ads out of the way. Rates fell for 6 straight weeks, which is pretty good. If you don't know that, then that's obviously something that you're gonna want to understand a little bit more because it's been going on the decline. So if you've been one of those individuals to say I need rates to come down in order for me to buy, then now if you didn't know that, that means you're not watching rates enough, and you're probably not interested in buying a home at this moment because rates went down to, as you guys can see, I actually had it on the thumbnail as well, which is 6.63. Probably not where they're at right now. We can take a look at that a little later. I can almost say most certainly they're not there now. But this is where they were at the end of last week. And that's a good sign though. That means things are kind of coming together, I will say. All right. And if I'm not mistaken, rates just a year ago, right? We're at 6.88. 6.88. Yes. I don't think it's here in this article. Don't think I saw it in this one. But it was at 6.88. So rates are coming down. Probably not where a lot of people want them, which is your in your fours, your fives. I will say you can still get fives. You just have to get extremely creative with how you structure your offer, or even just speak with your real estate agent that you're working with and let them know, like, hey, I need my rate to be as low as I possibly can, because there's a lot of things that a lot of people are doing. If you don't know, I'm more than happy to share what people are doing. Just drop it in the comments and let me know. Let's put it in the chat box so we can go ahead and just start discussing that if that's of major concern to you. But rates dropping, are they going to continuously go down? We'll talk a little bit more about it later, but no. In fact, I actually have tours later that I'll talk about this, where I'm going to share with you what you should really be looking for in terms of market trends to help you really understand. And that's why I can say with certainty, as long as nothing happens in this economy, right? I mean, with everything going on with prices, inflation, tariffs, trade policy, it's so much. It's like, how do you keep in track of all of this stuff? Sometimes it gives me a headache. But for those of you, I think I said this last week. I don't know if it was that week or the week before that, where I say I hope you are, whoever's in the market now and under contract, I hope you lock in your rate, because if you don't, oh man, you just lost out on a good opportunity. Spoke to a guy today. Funny story. Spoke to someone today, and he said that he was working with a potential client, right? It was a prospective buyer that they wanted to get a loan for. He got them their loan. I think he quoted them at 5.5, and this was for a 15-year. This isn't for a 30-year, which I also should say that 6.63 that I mentioned here earlier, that is in reference to the 30-year. So a lot of what we're going to talk about is the 30-year fix. We're not talking about 15 years or the arm, or we're not talking about that. We're just going to keep it real generic based off of what everybody really gets when they're getting a loan, which is a 30-year fix. But back to my story. Spoke to a guy. He was like, yep, I got these guys at 5.5. And he said, thankfully, he locked them in because they were shopping him, which a lot of people do that, right? They shop real estate agents. They shop everybody, which go ahead, do what you got to do. And so he said the other person that they decided to go ahead and speak to, I think he didn't lock it in, or I don't know what the case was exactly, but something like they eventually found out that their loan, at least their rate, was going to be a 5.75. So that quarter of a difference that enabled him to get that business back, right? And that's because he knew, hey, let me lock this in. And this is, of course, I'm sure during the time where rates are coming down, and of course being savvy enough to understand what's going on and being aware of your surroundings. He said, let me lock this in this. And why is this keep happening? This is no good. Because now this is getting me frustrated. It's like 1 week. It's like really good. And then the next week, it's like, oh, I'm going to give you hell. Let me wait for this thing, man. If you're watching and you're getting this jibby jabber BS with my Wi-Fi or my connection, my apologies. Loved your post about moving to Raleigh, North Carolina. Antoine said that. Appreciate you, man. I don't know what post you're talking about, but if you can elaborate on your post, on the post that I made, that'd be great. I used to, if you guys don't know, I used to do a lot of content on the moving to Raleigh, North Carolina. I used to do a lot of it. Stopped doing that just because I felt as if there was more value I can give to those trying to get into the market rather than just talk about Raleigh, North Carolina. I mean, there's so much that I can talk about it, right? It's on top of that, there's so much that is going to change year after year after year, right? And it's just how much can I repeat before you all get bored? But Antoine, I appreciate you loving the post. I just don't know what post you're talking about. Maybe if you provide what it is that you saw, then maybe I'll do more of that. I definitely lost my train of thought though. I think at story time, I think I was at where he went to lock them in. This is why I said if you were in the market or if you're still in the market right now, you better see if you can lock in your rates because right now they're the lowest that they've been in the past year. I mean, yes, if you waited for a whole year to get to this point and it didn't really do much of a difference, right? It didn't really shave off that much because I think the peak was like 7.5%. Woo! What a time to be alive, right? But go lock in those rates, man. Go do what you have to do. I don't think I need anything else in this article here per se. Do 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 do. Let me double check. Um, yeah, I think I'm good with this. Yeah, the key point is rates did come down, guys. So if you've been in the market, then you don't have that much of an excuse now. Or maybe you still do. Antoine said, "LOL, you made a video telling people what they should know about the housing market. You actually helped me. I moved here as the VP of HR for Duke University. Okay, congrats to you. Congrats on the move. Congrats on the employment. I'm glad that I made a video that really did help you. Again, we do this every Wednesday, so if you found value out of it, thank you, appreciate it. And if there's anything else I could do to provide more value to you, then let me know and share this with whoever it is that that can take a little bit more value from this as well. Because this is what I do it for. I do it for everybody that's trying to get into the market. Yeah, sure, I can have a real estate agent's bias about everything, right? But it's beyond that. There's a goal, there's a mission, and that's truly indeed to help other individuals like myself, right? Had no idea. And in fact, I have a video that's going to be releasing and you'll hear about like my story of just how I had no idea 5 years ago what was real estate, right? Of course I knew houses, right? But I didn't know the details, the intricacies of getting into it, how to navigate it. And sure, I can look at it and say it's easier for me now because I've been through it several times, whether it's myself or even helping clients buy and sell. But just to be able to give that and pour that into everybody that's looking to get into the market, especially this market that we're in now, where home prices are up, you have interest rates that are high, inventory we're limited in certain areas, right? These are all things that are not going to be solved within the next year or a year and a half. Honestly, I see these issues being a thing. Maybe not so much of interest rates, right? Mortgage rates, but inventory wise and home prices, I mean, that can be a sustained that can be an issue that goes on for at least another 5 to 7 years, honestly. Because in order for prices to really come down, you need more inventory. And who wants prices to come down right now? Yeah, sure. Everybody that's on the sidelines want that, but people who actually own homes, they're praying that prices don't go down. And fun fact, and I'll talk about this next week in my live stream. There's like 90% of sellers who are scared right now to sell. So I'll let you sit with that. If you think inventory is going to come from the 90% of people who are scared, no, they're not trying to move at all. They want to make sure that their stuff are the best. We're gonna get. I'm Antoine, man. You're gonna find out real quick, man. I don't like to sugarcoat nothing. Antoine said, "You are the best." You are so right. I mean, I'm not gonna sugarcoat nothing. I'm gonna tell you how it is, whether you want to hear it or not, and that's just how I am. Sometimes it works for me. Sometimes it's like one of the things that I should kind of peel back a bit. But it's if you have the raw information, then you'll know exactly what to do and how to position yourself. But let me go ahead and get into this article here because I think this one here you can be able to see exactly. You can see exactly how those rates have been impacted, right? Coming from the high and going all the way down to their low. So you could see in the past 5 years what interest rates have been doing. Maybe I should zoom in on this, right? Mm. Do. That was fine the way it was. So you can see it, but it's not like that good. So I'll just leave it right there. But yes, so we're talking pre 2020, right? Rates were at 4.5. Ooh, I got a text message about food. Sorry guys. Give me 1 second. Anywho, you can see pre-COVID, it was 4.5. That's where rates were. Then obviously they did their little dance and they went all the way down to 2%. Everybody was having so much fun. They even danced around 2-3%. Everybody was like, "Yeah, real estate, get in, get in, get in, get in, get in." Woo! I got my rate so low. People nowadays are like, "I'm never selling my rate," but yet again, they still do it anyways. When honestly they can just rent out the property. I don't know why people, especially that have those 2 to 3% interest rates, are not renting out their property before even considering the idea of renting. Or maybe they just have that much equity in it that it's like, hey, just give me my cash and I'm gonna run and go do this all over again. But that was really that dance right there that was happening. And then of course, bam, we got smacked in the face, meaning home really buyers got smacked in the face, 5%, and again it smacked again, then it went up to 7. And it's really been doing that dance here ever since. All right, so again, teetering between that 7 and that 6, really. Thankfully we haven't seen 8, but it's a possibility that 8 can actually come into the picture, given everything that's going on in this world. And I'm going to keep saying that just because there's a lot going on, and this thing can take a turn to the left real quick, or it can go right really quick. Right, right being good, left being terrible. And no, this is not that was not political at all. I could see how some of you can take that, but you can see based off of where it was last year, which right. So if we look, no, it was 6.63. All right. So this is where it was last year. I believe they said in December of last year, rates were this low. I don't remember exact date, but look how long you have to wait in order for rates to come back down to this level. And for it to come down to here, I mean, who knows how long else we're going to be looking or waiting. The interesting thing I will say though, this and like I said, right, you could look, this says, let me get out of this. It says mortgage rates fall again as spring begins, but I will say this is not your typical spring market. I've had several conversations with other real estate agents just to kind of see if they're experiencing the same thing I am, because if they are, then that means I'm not alone. But if there aren't, that means, all right, I'm doing something wrong or I messed up somewhere in my process and whatnot. But and everyone's saying the same thing. Like this is, unless if people are just lying to me, but outright. I mean, if that's the case, then that was just I'm SOL, and I'll figure it out eventually. Never let a mishap, really define you. I will say, but my conversations with other real estate agents have been, this is a slower spring market. I mean, I remember last year vividly. Man, I kid you not, maybe late January, February. Oh my gosh, my phone was literally off the hook of people that are just getting ready, right? Getting ready for that spring. But we're like a week out from spring, I think, right? If I'm not mistaken, it's the 21st. Yeah, whatever the date is of the spring, first day of spring. This is much slower, and for those that have been experiencing a little bit slower market, this is, to say, interest rates could play a factor, and it could be price. It could be so many different things. I truly indeed think that most buyers are just waiting. What is everyone waiting for? Oh my gosh, I wish I knew myself. That right there is like the crystal ball answer, right? If I knew exactly what everyone's waiting for, I'd be just fine. And you guys all honestly would be just fine because I know exactly how to navigate every single one of your scenarios. But everyone's just waiting, and it's I really don't have the answer for you. I really wish I could tell you what everybody's waiting for. Actually, if you're waiting, do this for me. If you are on the sidelines right now, whether you're right now watching live on the replay, just let me know in the comments in the chat box. If you're waiting, what's your reasoning of waiting? Because I'm really curious to know on why is everyone waiting? Because prices have done nothing but go up. Interest rates is coming down a bit. Inventory, yeah, this may not be like, it may not be all that. Now you can actually get a bargain, right? You can actually get a better deal than probably ever before. So why are you actually waiting? I don't know. Let me know. If you're on the replay, hashtag replay, do all of that. The hashtag replay, let me know why are you on the sidelines? Because it's a good question that can help me understand better. Well, where's everybody's mind at? Paying down debt. Okay, we got CC coming in hot. Paying down debt. Okay, I can respect that. Ain't nothing wrong with that. I'll tell you that for sure. So if you're going to pay down debt, have a plan though. Don't just say you're going to pay down debt and not have a plan on how you're going to tackle that debt, right? That's one of the things. Like, if you're going to pay it down, what's your strategy? Are you going to tackle the big ones first, or your big debt first, and then allow the smaller ones to then you could double down on it and trickle on them, or are you going to tackle the small ones to then use those funds to tackle the big one? There's a strategy to it. Are you going to go ahead and try to find additional income, right? Are you going to try to find additional income somewhere else to use that income to help you pay down that debt as well? Again, if you're gonna say pay down debt, just have a plan. That's all I say. And CC said, I do. It's gonna take a while. Take as long as you need. There's no rush. There is no rush. I'm not. The last thing I will ever do, and you'll realize it, and a lot of people will figure it out, is I'm not gonna rush you into a decision that you're not even ready for. That just outright doesn't make sense. Not my personality. It's not my taste. You're gonna be ready. There's a favorite quote I like to use, right? If it's meant for you, it won't leave you, right? So if you're ready to purchase, when that time comes, you'll know it. Just strike at that point in time. Don't be scared just because you're ready. I see it happen all the time, and it's just like I just chuckle because it's like you wanted this, especially if you wanted it. Now it's here, right? And then you give yourself all these different reasons and excuses as far as why you're not going to get it done. Don't let that happen, especially if you know this is what you're looking to do for yourself, right? Don't let the outside noise, even including myself, right? Don't allow me to gauge you into doing something that it's not for you, because otherwise that's your house at the end of the day. I love when people ask me for my opinion about a house. It's like I think it's a great house. I mean, this is your house, though. You're gonna live in it. I look at it more as like, hey, how is it that I can help a buyer purchase a home, and it's a good home that if they decide to sell, then they can be able to get out that house and sell later, and make a profit on it. So that's how I look at all of my buyers. And maybe it's not the right way of looking at it, but I personally don't want a buyer to be stuck and making a bad purchase and being underwater and being stuck and now looking at me like it's all your fault. It's like, come on now. But I did a little too much rambling there. I want to share with you this next article. How do I have the same one? Hmm. High mortgage rates. Sorry, my Wi-Fi is like giving in. I need to have a real good conversation with Spectrum. They're gonna hear from me. I'll tell you that right now. But our interest rates expected to come down, as I mentioned. I don't really see it. A lot of people aren't expecting them to. And one thing that you can really take a peek at to see where mortgage rates are going to actually go is the inflation. Inflation rate, I think, is right now one of the big factors in the real estate market that's really keeping mortgage rates as high as they are. In fact, let me actually do this for you. I can actually show you why mortgage rates are actually staying as high as they are. Because of this over here, right? So between March of 2021 and dating all the way to May of 2023, right? Inflation really did its job in a way where it just increased everything. And so we're playing catch up, right? And that's where we're kind of standing with it. And so up until like, yes, it's been kind of steady and slow, but I don't think we're going to really see rates come down up until there's real stability here. And hopefully the Federal Reserve Chair, Jerome Powell, is comfortable enough with lowering them. But it's also said that like the spreads on the mortgage rates is what's also scaring a lot of people. Because if you guys don't know how mortgage rates actually work, you have so essentially when you get a mortgage, and this is a little high level. So if you don't understand it, please just let me know, Ronnie. The conversation here, no, this is not it. But when you get a mortgage, that mortgage essentially will get sold off to someone. Not all the time, but most times it will get sold off. So that's why if you go ahead and purchase a home and you get another letter like, hey, this is your new loan servicer and whatnot, there's a chance that they sold that, right? So there's a spread between what the market is and what you are actually going to get in terms of your interest rate, your mortgage rate. That's where a lot of those people in between that's where they make their money. So that's when I say spread. Right now, supposedly that's really wide. And so we need that to be a little bit narrow. What's going to help that? Of course, inflation, and of course, a little bit more predictability of what the future is actually going to hold. But right now, I could zoom in on this. I should have did that earlier. This is what's really this inflation going up all the way to practically 9% is what's killing everybody at the time being. And I know I mentioned earlier about how a lot of people who have mortgage rates that are in the 2 to 3 range, right? How they're just kind of like chilling. They should be chilling. Some of them probably are selling. If you don't have a mortgage rate in that 2 to 3 range, there's actually surprisingly a lot of people who are actually refinancing right now too. Which, if you're refinancing, this is one that I really want to share with you guys. If you're going to refinance, and this is for a later date, especially if you don't have anything right now, a home wise. If you're going to refinance, you're gonna have to pay in order to refinance. So you want to shave at least 2% off of your interest rate, off of your mortgage rate. So let's just use this pretty picture here for an example, just so you guys can really understand. Anybody that has a 2 to a 6.5 really should not be refinancing at all. And in fact, when rates actually came down, right, more people were looking at the refinancing market, which means, we're talking about that 6.5 interest rate, right? 1.6 million people, and however that number looks like, right? Because I doubt those individuals who have 6.5 exactly are refinancing it. It's those individuals who are probably sitting in the 8s, which if you have an 8 right now, that means you bought at the peak when rates were at 7.5, and you probably didn't have, it was probably a risky loan. You didn't have the best of the best credit, which is possible, right? So those are the individuals that I can see refinancing right now. But it's not going to be that many people. In fact, yes, people have been refinancing, but it's my personal opinion. It's not a lot of people for the refinance market to be kind of like, jumping up and down, having a party about it. But this is essentially what it all looks like, right? And this is part of the reason why you see not mortgage rates, you have inventory that is kind of stuck, right? You have literally 13.1 million, 11. So we're already looking at 24. Then we're already looking at about 33 million people that have a rate between 33, 37. That's about like, let's just say about 40 million people. All right, that's rough math there. I could have did better. 40 million people who have rates between 2 and 4. Let's just say 2 and 5 because I did include this one. And so no one's going to really move into those. And this is just kind of what I'm seeing. No one's going to really move into those rates, get to those points. But it's okay. We will make it work. Again, there's a lot of people now getting 5s. Again, I mentioned a story. Again, that was a granted, that was a 15-year, right? A 15-year fixed mortgage that we were talking about. There are people that are actually getting that, and because it's the incentives. Don't sleep on them. Don't sleep on them. Don't do it to yourself. You will regret your decision later if you knew that incentives were out there that can be given and you weren't maximizing on this. But in the beginning of the year, like everybody does, there's forecasts on where everybody thinks the market's going to go. This is why I don't like doing forecasts. This is why I don't like even answering the question, where do I see mortgage rates going? Because it's like, whatever I say today could be wrong tomorrow. Right. So that's why I kind of just say, hey, I take it day by day. I understand what's going on in the market, and I navigate based off of that real time scenarios or situations to help and really guide individuals on. But you guys can see here, I don't know exactly when this forecast was made, but you can see literally the current forecast is here, right? Is that blue one? Yeah, let's do that. The current one is that blue, and then what was prior was this tan looking line, right? You can clearly see a lot of people thought, oh, we'll come down, right? Rates will come down. Woo! Getting everybody ready and amped up to only everyone changing their mind and saying, nope, we're gonna go higher. We're gonna go higher, which hey, you have to live with it. And I wanted to share this with you. Take the picture so you guys can kind of see, compare, contrast later to see if this forecast was right. Because these are the sort of things that are constantly being put out there, and it can skew your decision making tremendously, especially if you don't have the right information. You're thinking like, if you take a look at this in the beginning of the year and you thought rates were going to come down, only to prepare yourself and get smacked in the face when rates are only higher than what they potentially they previously forecast, that can put a dent into your plan. I mean, right now there's a number of things that can play a factor, and I think I mentioned it, right? So inflation data is, of course, something I already talked about. Tariffs, trade policy, all that trade war stuff that President Trump is doing right now. And I think if we have a stronger economy, we'll be a-okay. Rates will actually start to come down. Maybe they'll change that forecast once more. But right now, there's just a lot going on. And because of how much is actually going on, that's right now, that's what we're dealing with. But we'll be all right. Degenerate learner. What up, my boy? What's up? Sorry, I was late. Didn't get a notification. Oh, you got to turn that bell on then, man. That's all good, man. I hope if you have questions, let me know. I'm here to help you, as you know already. Shows up regularly, man. That's a real one. Shout outs to him. I should have like a bell or something for those individuals that come back. We gotta really celebrate y'all, because to show up on a consistent basis it's not an easy task. That is not an easy task. Like, yeah, even myself. There was I won't tell you which day it was that I was streaming, or at least I came on and I was like, man, today I just don't want to do it. Today was one of those days, but you won't know because I still showed up. Oh, brother. But I will say, if you're not taking action on what's going on with the rates, just know other people are. Whether it's they're refinancing it or they're actually going out there and getting a home loan, right? Whether they're, seeking out information. You can see, right? Weekly demand surges 20%, right? After the whole drop. And of course, we talked about this already. Right. And the thing about this though, yes, it surged 20%, but that was only talking about the volume, which I was like, come on, man, don't try to play my people now. Try to tell them like a lot of people are actually in the market, really looking when it's only 20% of the volume. And the real one is the applications, which that's when I saw that and I was like, oh yeah, they tried it. That's why you got to read these little things, like you see. So applications for a mortgage to purchase a home rose 9%, which it still shows that people are taking advantage of the interest rates coming down. But 20% in just volume, come on. The real number that we all need and want to know is the applications to actually purchase a home, because that's all that really matters. Who cares about volume? The people who are seeking for information, they can seek today and be gone tomorrow, as if like, hey, I don't even want a home. But when I saw that the application for a mortgage to purchase a home rose 9% for the week, that right there was like, okay, people are actually taking advantage of this. Which, again, take advantage. If mortgage rates are coming down, I don't want to be the one to say, buy now and you can refinance later. But if a good opportunity presents itself, you might have to do that. And what is a good opportunity like that, right? So I'll paint this picture for you. If you found, let's just say you're ready, your debt is down, your debt to income is good, your credit's good, you got cash ready to go, you're more than, you won't be cash poor, you can furnish the house, you're in a good position, right? If that's you and you found a home in your price point that fits, let's just say you had a checklist of 5 needs and it checked off 3 of them. And then on top of that, let's just say it's okay, what's another scenario I can put in this? It checks off 3 of your needs. It's in your price point. The only thing that is hurting you right now is maybe, let's just say, the interest rate, just to stay on topic. If this home is a newer home, then I would be kind of like, all right, wary of, do I move as fast or do I kind of just chill and wait to see what happens? But if this is a home, and this is when a good opportunity presents itself, if this is a home and you have found that, if this is a home that's been on the market for quite some time, that right there is a telltale sign that I'm going to go in and I'm going to strike a deal, right? Even if it's only 3 out of my 5 needs, simply because you're not going to get these sort of opportunities on a regular basis, especially with inventory being so constrained that it is. Yes, it may not be constrained exactly in your specific area, but in most of the world and and then again, we can look at past streams. You guys can go and look and see where inventory really is. It's only a few places where inventory is even greater than what it was prior to 2020. But right now, if that's a deal for me, right? If a home has been on the market for quite some time, it checks off majority of my needs. It's in my price point. Obviously, you're ready to purchase, and it's not going to leave you cash poor, because you can always lower that rate, right? And how you're going to lower that rate? You're going to strike a deal, right? Maybe if you really, really want to, you can lower the price point on that and then buy down the rate yourself. Or you can say, hey, seller, you really need to sell this house, I see. So what I'm going to do for you, I'm going to give you, let's just for numbers sake, I'm going to give you 300,000 for your home that you want, right? Maybe list price is, let's just say list price is 300. Actually, I'm going to give you 300, which is what you want. But I need it depends on your loan. I need 10,000 to help me buy down my rate and to really go through with this home. That right there can lower your rate 2 percentage points. So if we're talking right now 6.63, just for number 6 of what we've talked about today and what rates went to the lowest of, you could potentially be looking at a 5, right? A low 5, high 4s. Thank me later, but don't say I didn't tell you, right? So if you're in the market, look for opportunities right now that homes have been on the market a little bit longer. That's where the deals are really going to come from. Sorry, I'm late with this one. Sorry, degenerate learner. I was 100% ready to jump into the market up until the last 2 weeks. Oh, man. These tariff games are stressing me out. Why are they stressing you out? Oh, man. Tariffs just actually, I think, got implemented. And then if I'm not mistaken as well, there's a deal being struck with Canada right now, which is good. Because if a deal is being struck with Canada, that's where most of I believe our lumber comes from. Steel as well, but steel isn't really a concern when it comes to residential. But our lumber comes from Canada. So if you're really concerned about the tariffs, Yeah, tariffs stressing you out, man. You gotta pay attention. If a deal gets struck with Canada, then you should be a-okay. And meaning, even if it goes up, even if tariff is implemented, you have to remember it's not going to be something immediately, and it's probably going to be more on the new construction, right? And the new construction is going to get hit harder with tariffs rather than resale. So something to really think about. But don't let tariffs scare you, man. Oh man, we can shave the cost of tariffs and a great deal for you immediately if that's the real concern. I got a pretty picture to show you how many homes are in contract. Let me pull this up for you. This is why I don't want you guys to be out of the know because people are striking. Like the general learner was ready. He said it 2 weeks ago, man. He was ready, and then he decided to pull out. But here are the amount of people that got homes under contract in 2025. So this really is not going to have anything. No, the interest rates really, mortgage rates don't really have anything to do with it. It's more just showing you, all right, well, how many people are actually still in the market to purchase, right? This number here, well, really looking at this dark red line, not the bright one, the dark one, is really going to give you an idea of how many people are actually looking and actually purchasing. As you guys can see, it's really still in alignment with what happened in 2023. It's of course less than what happened last year, which is expected, right? I think sales were down last year, as well as not last year, 2023. I thought sales went down last year as well. Sales were definitely down last year in terms of number wise. Sorry, but you can even see it says 3% less single family homes in contract than last year. All right, so less people are buying, which, as I mentioned earlier, everyone's waiting. There's something on the sideline that's everyone's waiting for that I don't know. I think it might actually be tariffs. But here's what I want to kind of point out. So if we look here, ooh, that went pretty quickly. So if at this week's 30-year, and of course this is talking about when the rate was at 6.63, if you were looking in the market for a $400,000 home, right, your mortgage payment would have been $2,050, right? Assuming you put down a 20% loan, put down 20%. Okay, well, okay, yeah, that's great, but that's not really what I wanted to show you guys. I wanted to compare how much of a difference it would have been, and I'm not gonna do it right now just because my Wi-Fi is real wonky today, anyways. Because of course, the more money you put down, the less your mortgage payment is going to be. So that's why I really wish I should have did better at making sure that this was actually going to show me what difference of, a rate being at 6.63 in comparison to what it is today, how much of a price point difference that would be. And you could go ahead and do that. I'm not gonna waste your time here and try to do that for you. Maybe actually mortgage rates, bank rates will actually do it for me. I know they have a really good calculator here. Degenerate came back with a comment. Let's see. While this is loading, I see houses on the market that are decently priced, but have been on the market for 90, 100 days. I think this might be an opportunity to strike a deal, but also wonder why no one else has made offers. What everybody else is doing, it is not your concern, my friend. Go in that house, go look at it, do your due diligence, look through it thoroughly, right? Take your time, right? Even if you have to look at it more than once, do that so that you can then make that decision if it's worth moving forward. Why somebody else doesn't want it the least of your concern. If you're working with a real estate agent, you can have your real estate agent try to find additional information as well prior to an offer. But why somebody else? And that's something I've experienced a lot. He says most other houses are, yeah, which is fair. Again, those are move-in ready, right? The one that you're looking at that's probably on the market for 90 to 100 days may need a little bit of work. Not everybody wants to do that. I'll tell you right now. Not everybody wants to put sweat equity into a property. Most people want that property that's gonna they can put their key in and walk in and hey, they got a home. So what everybody else is doing, lose sight of that, please, for yourself. Right? Go in, take your time. Like, there's no rush, literally. I don't know why I have this up here. I don't know why. One thing for certain, I want to make a statement here is like I'm not oblivious that home prices have gone up. I'm not blinded by inventory and being blinded by the fact that inventory may still be limited, and there's so much uncertainty in the economy in itself. So mortgage rates really coming down may mean nothing to you. Honestly, you're probably like, hey, I still want to purchase a home, and that's if that is the case, then we did it on a previous video, but we'll do it again. Right, here are some things that we can go ahead and really discuss and talk about. But again, the opportunities are in front of you. I mean, the general learner, you saw and you're seeing opportunities right there, right? What's more important to you right now? Is it cost wise? Is it your mortgage rate? Is it finding the best of the best homes? Right? These are the things that if you really take your time and just analyze that, and you don't have to tell me, right? Just ask yourself that question to really understand, why are you even holding yourself back? Because if you know your budget and your financing and even your financing options and you're ready to go, then you're going to be good. Right. Right. That's one of the first things I would definitely say to do. And if spring brings more inventory, which typically it does, right? We're waiting for those sellers to really unleash inventory, but they're scared. It's crazy. You have two sets. You have the buyers and the sellers who are scared to move. So really, everyone is stuck. And when I say sellers are scared, because not every seller wants to go ahead and sell their home to then be dealt with 6-7% of an interest rate, or even more. They're paying for more home, for maybe more. They're paying a higher price for a home. So you have sellers who are like, why would I move if everything out there is maybe worse than my current home? I'm probably going to be dealt with a worse interest rate. I'm also probably going to be paying more. So why would I really move? In comparison, on the other end, you have buyers who are like, hey, these prices are too high and mortgage rates are too high. So it's like, yes, spring inventory can bring more, but if it comes in droves, just expect a little bit more competition, and we may even experience, if that's the case, if it does come into droves, we may even experience multiple offers. I don't think multiple offers are really a thing right now. Right? I think actually, I take back my words. They're a thing, but it's just depending on the property. I heard a story today of somebody said, yeah, we put a home on the market. 36 hours later, we got that home sold, and they got it sold more than asking price. I was like, why are people still paying over asking price? But that's just my own thought. The house must have been a really good home, and they actually had 6 offers. So it was definitely a multiple offer situation, which is good part on the listing agent on their marketing and how they got it out there. Let's see. The general learner says, letting the news headlines have more impact than they should. You are not alone, my boy. That's why I do this. That's why I'm going over these things with you so that I can break it down with you. Because some of these headlines, I mean, I don't know if you were here when I talked about the other one, where it was like, I'm not going to pull it back. I'll try to find out where it is. It says weekly mortgage demand surges 20% higher, right? And I was like, okay, well, that's good for the mortgages, but it was just talking about the volume. It wasn't talking about mortgage applications, which mortgage applications to purchase a home is a whole different aspect of what they're talking about. So news headlines is not gonna, it's gonna get you, it's gonna get everybody else. It's meant to do that, right? We're talking about something that's meant to get everybody to click, to get everybody to start, thinking and being in their own head about something. But if you show up here every week, you'll be all right. You'll understand what's really going on in the market. And I'll tell you, if things are about to hit, I wanted to say something else, but if things are about to hit the fan, I will forewarn you. I will have no issue in doing so, just because I want you guys to all be safe, right? Real estate is a beautiful thing, especially if you know what's going on and how to take care of it and how to maximize your opportunities in it. Then, you'll have a great opportunity there. In fact, I mean, this is what we do every week. While I'm here talking about it, this is what we do every week. Show up here 7 p.m. Eastern. If I'm not here, something's wrong, or they got me, whoever that is. But just know I'm here to give you guys all the information. Come with your questions. If you do see an article, better yet, if you do see an article and you want to discuss it in detail, hey, bring it over to me. Send it through my email. You can find all that stuff in the description below, and let's discuss it. And if I can't service you directly in your market, I'm connected to literally thousands of real estate agents. So if you need to be connected to someone that's going to take care of you the same way I would take care of you, then just reach out to me. Let me know. Fill out that referral form in the description below, and let's get to it. Let's get you what you deserve. A home, the American dream, right? The right way. And I say the right way because, yeah, the past couple of years, I don't know if it was the right way. And I think anybody who bought in like 2022, which was that peak, literally the peak, they got screwed. Depending on how they bought, I should say first, because everybody bought differently. But yes, if it's going to bring more competition, this is just to really help you. If the spring does bring more inventory and competition, just be ready to move a little bit quicker, because you may be multiple offer situation. Right now, you can take your time. So just take advantage of that if that's the case. Have your pre-approval, of course, ready. You should never go shopping for a house without a pre-approval. You want to know at least your idea of where you're going to be at in terms of price range, where you can purchase at. And be flexible with closing date. That's just I mean, you can be flexible or you can just be stern. The reason why I think it says be flexible, because it's going to help you, especially if there's more competition. It's going to help you with being able to structure an offer that's a little bit more beneficial to the seller, because multiple offer situations, that's what happens. You want your offer to be a little bit more favorable for the seller so that the seller can then accept your offer. But inspect the property thoroughly, right? That goes for now, that goes for later, that goes in every single market. Look for the good, look for the bad. Don't walk in the property and just literally look at it for something as if like, yeah, I can imagine living here. Okay, well, if you can imagine living yourself there, well, what are you gonna have to do as well to bring the place up to what you ultimately love? Because I'd question how many homes are actually out there right now that is perfect for you. Literally perfect. Checks off everything. Unless if you build it. All right, that's just my take on it. Unless if you build it, I'd argue that there isn't really a perfect home. Sure, there's homes that's really close to perfect, but to check all of your boxes, I think that's damn near impossible. Unless, if, like I mentioned, you build it. So inspect your properties thoroughly in every single market. Think long term. Again, this is why I can't be too dogged up on interest rates and mortgage rates, just because I like to think long term. Real estate's a slow game. Real estate is gonna at least take you 10 years to really, really see a dent in terms of what you've paid for it and even what you've paid down. So if you're not thinking, 10 years, honestly, I like to say 7 to 10 years, then really don't purchase real estate. Just continue to rent, do what you got to do. Consider the neighborhood, of course. That's an important piece, because you don't want to buy a house in the wrong neighborhood. And then the last but not least, but you have the closing costs. If you guys don't know, closing costs is going to range you 2 to 5% of your home purchase. So if you're looking for a $300,000 home, I'm not going to do my math in my head. $300,000 home, 2% of that, you're your closing costs could be on a range from 6,000 to 15,000. And if that's like, whoa, that's a lot for you, well, go look for a home that's been sitting on the market a little bit longer, and maybe you can get the seller to pay that for you, because that's what's happening. And that's been happening for some time, right? That's the type of stuff you won't find out on the news or news headlines. You won't find that information anywhere. You have to literally have conversations with real estate agents, because sometimes I don't even tell everybody that, I got sometimes, and I do a poor job at it. Sometimes I don't even tell or even market that, hey, I just got my clients, closing costs paid for. That's their business. So I kind of keep everything personal, private at that point in time. But if you are also on the sideline for several different reasons, one thing I'll definitely say is, if you're concerned about making repairs or going into a home and not being able to understand exactly what's going on, you can even look for a home that has a pre-inspection or a pre-listing inspection. And so what is that? Essentially, it's when the seller decides, hey, I'm going to inspect this property. I'm going to have an inspector come through, tell me what's wrong with this property so that either they can fix it up or just to make you more aware of what's going on. So that's something you can also look for. It's not common, so you may have a hard time finding some, but if you still have a hard time finding it, there's another opportunity that you can look where, if a home did go under contract and the buyer did do an inspection and share that inspection with the seller, you can also have that information. But again, getting that paper, it's not even getting a seller to do a pre-listing inspection right now. They got to really be motivated to get out for whatever it is that they got to do, because we're not really seeing that much of it. Again, homes are not sitting that long, especially if it's a really good one. But I want to share with you, before I go ahead and wrap up for today, what to really pay attention to, right? As you guys are getting headlines, as you guys are seeing these news articles, as you guys are seeing President Trump do his thing, right? Yeah, you're probably going to be bombarded with different type of ideas and things like that, whether it's good or bad. So the key things that I'm really looking at is mortgage rates, right? Are they going to stay around that, right now where they're at, that 7 to 6 range, or are they going to trickle down a little bit more? I know a lot of experts already said that 6% is really the bottom line. So if you do see rates go to 6%, it may be worth, moving a little bit faster. And I'm saying 6% flat, right? So it's moving a little bit faster so that you can go ahead and lock that in, right? But you got to remember, if you're going to pay attention to the mortgage rate and that be a key thing, make sure you lock in your rate. Most times lenders aren't going to allow you to lock it in until you're under contract, but maybe you'll have one that decides to lock it in prior to. It does come with a fee, but the fee is worth it based off of how much you'll pay in mortgage rates and how much you're paying interest later. And then another thing is inventory. So we've talked about that earlier today, about where inventory really is and how it really is it's constrained right now. But here, I'll share this. Inventory is really going to help alleviate a lot of that pressure in terms of prices, and a lot of kind of slow down what they're doing on their end. But if we look at this, you could see where we sit with inventory, right? And this is for single family only, though, which we're at 26 more inventory right now, 26% more inventory than 2024, which, if we really think about it, more inventory technically should mean prices come down. So that's why I say pay attention to the inventory. Those are really the only two trends I'm really paying attention to, because I know those are the only two things that are going to get people moving, is mortgage rates and inventory. All right. Mortgage rates is going to help with affordability, and inventory is going to help with affordability as well. And that's really the biggest bog down right now between a lot of individuals. But if you guys don't have any other questions at this current moment, I'm going to get ready to dip out of here. I'll be here, of course, as you guys know, next week, 7 p.m. This is where we talk about all the real raw data that's going on in real estate. We're gonna, degenerate learner, this is for you, man. We're gonna really break down those news headlines so that you don't get, too much in your own head and feel as if you're losing it. But next week we're actually gonna be talking about, where are those home values decreasing? Something decreasing or increasing, because again, it's there's two tokens, there's two sides to a coin. So, but it's all depending on the region. So we're gonna be really talking about that, as well as how sellers are too scared right now to sell, which we kind of touch upon that. So get ready for that conversation. Bring your questions. If you don't have any today, make sure that you do bring those, because tomorrow's kind of next tomorrow's only if nah, man, doing this back-to-back days, I gotta train myself to do that. But yes, if you guys do need help in your real estate market, in your local market, in purchasing a home, I am connected to thousands of real estate agents that literally I can vet for you and make sure that they're going to take care of you. So if you do need help and assistance on that front, just let me know. The description, go into the description, click that link that says something about like need a referral or need a realtor or something. I don't know exactly what it says. Click that link, fill out the entire referral form. That way I can get in touch with you and get a better sense of who it is I should connect you with. That way we can make sure you're well taken care of. But with all that being said, y'all have a good one. Stay blessed. Be safe. Don't get too caught up in the headlines. Sometimes they don't mean anything.